Hey everyone, it's Michael Baltos here from Orderflows.com, and here is the Orderflows market analysis for April 13th, 2017. I apologize, I haven't been able to get many videos up over the last month or so. Actually, I've been extremely busy schedule. I've been traveling all over the world. Actually, I've now settled back in the Philippines for at least the immediate future. By that I mean at least the next 3 to 6 months, and I hope to get more videos out for everybody. I've got a webinar coming up on April 19th. So, the link will be down in the description. So you can go there and sign up for it. But before I get started, again, the brief disclaimer: this presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. There's a reason why we have a disclaimer. Well, one, the government requires it, but the reason they require it is because people come to the trading world with high expectations. They think they're going to become multimillionaires some seem to think in a week. But realistically, trading is hard, and you can't just go out and always think you can buy, some trading system that is promised going to make you thousands of dollars every trading day. Trading is work. There is no business in the world that you could just step into and start printing money tomorrow. You have to do your research, you have to do your due diligence, you have to do everything, and at the end of the day you have to do the work. Now, I get people coming to me thinking really that order flow is the way that's going to change their trading literally overnight, that they have to do no extra work to it. All they got to do is pull up the chart. But at the end of the day, you have to understand what you're looking at. You could have the best charting software in the world, but if you don't know what you're doing, then it's kind of pointless. It's similar to buying a high performance sports car. If you don't know how to drive it properly, how to use everything in the car, then it's going to be worthless. It's like buying one of those fancy DSLR cameras, for $1,000, $2,000, and just using it in automatic mode. But what order flow teaches you how to do is it teaches you how to think, right? We all, in this day and age, everybody wants to have everything automated, let the computer do all the work. At the end of the day, the best traders are the ones that make their own trading decisions. Yes, there are exceptions. There are companies out there, hedge funds, that are fully automated, Renaissance, it's all backed by rocket scientists, doing the research, and top level programmers. But for everyday people, we don't have those resources. That you don't think for a minute that you could just sit down and code something up. Maybe one person out of a million can do that, but for the rest of the human world, it's just not possible. But what order flow trading teaches you to do, it teaches you how to read the market, how to understand what's going on. People can learn how to trade properly, just as you can teach a dog tricks, how you can learn to play the guitar. You can learn to trade. It's up to you if you want to do it and put in the time and get the education to do it. But if you think you're just going to sit down and tomorrow become an expert trader simply because you have a footprint chart on your screen, no, that's not going to happen. Now, I know that that's a bit harsh. I sell software to help traders, but I don't want people coming to me thinking that this is the holy grail to trading. Will it help your trading? Yes, it will. But also at the end of the day, you have to put in the work. You're the one that has to figure out how to get your system up and running, how to go to the NinjaTrader website and download their software and get it running on your computer. I know people really want, in this day and age, everything done for them. And, at the end of the day, you have to learn how to use a computer. As basic as that sounds, there's traders out there that they don't want to take take the time to learn. I mean, who do you want to operate on you? Do you want somebody that, was a slacker in medical school, or somebody that, really hit the books and did their studying, did their experimentations, did their practice, in the hospitals? That's what you want. You want someone that's taking the initiative, and that's what you need to do also. You need to also take initiative in your trading. So the tools that I use in this presentation today is the Orderflows Trader footprint chart. And, for those that aren't familiar with it, real quick, it's a volume footprint chart. It shows you the volume traded on the bid, volume traded on the offer, and it's from there that you make your trading decisions. So without further ado, let's jump in. And, real quick, I'll just show you a few examples today. I'm also getting back used to recording videos. As I said, I've been off my normal schedule. I have a massive case of jet lag, flying on a lot of flights in a short period of time. And sometimes, I'm talking and words come out of my mouth. I don't even realize what I'm saying sometimes, because I'm so exhausted that I listen to myself and I say, did I just say that? But anyway, euro currency. This is from Thursday. Today is Saturday, the day ahead of Easter. So this was Thursday. There was markets were closed on Friday. So what do we got here? This is what the software does. You have a low here. You have a ratio, right? My software, I'm the one that came out with the ratios. Other people are adopting it, but if they don't know how to use it properly, what's the point of putting it in their software and giving it out to you? I'm going to be creating another video on how to use the ratios, because a lot of people are getting bad information on how to use them. But I have the information already for the users, but for non-users, I'd rather them not get shitty information, and it's going to cost them money. Okay, I mean, at the end of the day, I don't mind that other people are taking my ideas and putting it in their software. I do wish they would give me credit. Honestly, I'm the first one. Maybe I'm not the first one that came up with it. I mean, maybe there was one other person using it, but as far as I know, I'm the first one that. I've been using it in my trading for years, and I'm the first one to actually put it in the footprint chart, to help you make your analysis easier. Because you see a footprint chart, you see a lot of numbers, and people get fixed on numbers and they get scared. Everyone hates math, and why they hate math? Because they hate numbers. So what I created were these ratios, which I actually used to do in my head or sometimes on a calculator, but it got to the point where I could just look at it and see what the ratio was in a bar, whether it was bullish or bearish. If it's bullish, it's underneath. If it's bearish, it's on top. If it's a black number, it's neutral. Okay, so on a green bar, the ratio is going to be underneath, and if it's a ratio I like, it's going to be blue. If it's a ratio that's neutral, it's going to be black. If it's a ratio I like on a red bar, it's going to be above the red bar, and it's going to be in blue. If it's just a neutral ratio, it's going to be in black. So anyway, one of the things my software does is when you have imbalances at the bottom of a green bar, it's going to draw an arrow. It sounds very simple. Yes, do you need fancy software to do it? No. But what my software does is it highlights a lot of things in the order flow to you, so that it frees up your mind to look at other things. So it draws the green arrow here, so you know you have an imbalance here, which is very bullish in the short term. And as you can see, we went from 106, 45, 46, all the way up to 106.60 in a very quick period of time. Okay, right here, these are what I call the slam dunk trades. Are they 100% always happen and move in that direction? No, but a very high percentage of the time they work, and it's best in the short term. Don't think you're going to be buying it here at 906 and holding it 3 days. No, you're buying it here at 906. Yeah, you may be holding it for an hour max, 2 hours, extreme maximum. Really, you're just looking for the very short pop up. And 908, you're getting in. 915, it's still sort of hanging around break even, and then the move happens just after 930. Again, you go from the 106.46 at least up to 56 within the next 15 minutes. Okay, so the next thing I want to talk about is the bonds. All right, and again, you have a swing low here, or low of the day actually. You have a divergence. You have a positive delta on a new or equal low. You got your bar turning up, so the price action in the bar is bullish, which is what you want to see. I mean, you don't want to just be taking blind divergences everywhere down. You also want to have confirmation in the bar that the market's starting to turn up. Secondly, you have a ratio you like, right? It's a green bar, so you're looking for the ratio underneath. It's 34.96. It's a blue number. I'm not so fixated on the actual numbers. Really what I'm looking at is it blue or is it black? If it's blue, it's a go. If it's black, it's just your average bar. So you got a nice move, from this low. This is the low of the day at this point. It's 153.11. Wait for confirmation. Wait for the bar to close. People like to get, I'll say greedy, but they get excited. They see this happening. You see a divergence. You see a ratio you like, and you want to get in on the bar. But it's lots of times the bar is still trading, and what looks bullish all of a sudden turns bearish, and the bar keeps, market keeps selling off. So you're all of a sudden you're trying to get an early entry, thinking you're going to save a couple ticks, and in the end the trade's not there, and you're sitting on a loser. It's worth waiting for confirmation, waiting for the bar to close, and even if you got to give up 2 or 3 ticks, it's worth it rather than sitting on a loss that you shouldn't even have. So you can be getting in at 153.15, 153.16. And it made a nice move all the way up into the 20s. Then just sort of went sideways on you before keep going up again. I'm not looking to get long here at 908 and necessarily hold it all the way up to to 12 before it starts selling off. I mean, some people may do that. I don't. I definitely don't recommend that if you're trading a 4-range chart. 4 range is kind of a short term. Okay, the next thing I want to talk about is the E-minis. This is a 10-range chart, so it's a bit of a longer duration chart. And look what's happened up here at these highs. This was on Thursday the 13th, and we're hitting the highs. You have a divergence up here. You got a new high. This is a 10-range chart. You got a new high. You got a strong negative delta, 2,600. You have a divergence. Next bar, again, negative delta. Then you just go sideways in here. Strong positive delta followed by kind of a smallish positive delta, a small negative delta. Then you got positive delta, a new high by a tick. You got positive delta in these 2 bars. Now it's interesting. You have positive deltas with red bars. Well, what does that tell you? It's telling you that early in the bar there was some strong buying. Late in the bar the selling came in, and the selling took over the bar. And since it's a 10-range chart, there might not have been enough volume as you're moving down to get out to turn it to negative delta. Then all of a sudden you see the negative delta really picking up, minus 3,000, minus 4,000 as you start selling off. But the first sign that maybe this high might not hold is the first time you hit the high, you had a very strong negative delta. Okay, then it just sort of hung around up here, made this new high on smaller positive delta. You're going up, you have this bar here, 1,800, 900, and then it's getting lesser, 927, and then negative 3,000. I don't want to say it's safe to say, but the odds are now selling is taking over, right? Because you see the bars turning down. Delta early in the bars were strong. It was 2,000. The max delta tells you how strong the delta was in that bar before, during that bar. So at one point it was positive 2,428, ended up at only 977. The next bar, positive 3,800, only ended up at 927, and then selling just really took over. There was no more buying, minus 3,000, minus 4,500. At that point, you should really be thinking, hey, we're not going back up to new highs, and instead looking to get short. And if you're looking to get short, you're looking to get short somewhere around 38. In here even. 30 in this bar, 38 in this bar for sure. And we sell off from 38 straight down into new lows. You get a bounce up here, make new lows down to 30.5, and eventually 30.25 was the low. Now I'm not saying you're going to be buying it down here at 30.25. Realistically, off this little bounce, they short at 38. and it bounces up a little bit, if you could cover around 33, that would be a 5-point move. 5 points, on a one lot is great. If you're trading a 5 lot, even better. But anytime you can grab 5 points out of the market in the S&Ps, that's a great trade. I know a lot of people, trade with domes and all that. They're just looking to get the next 2 or 3 ticks. Yeah, that's all well and good. What would you rather get? Would you rather get ticks or points? I always espouse, look to get points rather than ticks. And then, later you got a new low. You got a divergence, you got a ratio that you like. That's different than this low. It's black number and no divergence. But here you got the positive delta, you've got the ratio. You get a little of a move, but then you run into a bearish ratio, and then it starts coming down, during the cash. So at best, maybe you would have just scratched that trade, and then the day ended. So, hopefully, you watch this video, you can pick up a few things about order flow. At least maybe it'll pique your interest. Hopefully it'll jog some things in your mind that will make sense to you. To learn more about trading software using this presentation and how you can profit from order flow, visit my website, www.orderflows.com, or sign up for my webinar that's coming out on the 19th. It'll be live. It's an all-day thing with investor inspiration. The sign-up link will be in the description below. So thanks everyone, and hope to see you on Wednesday, or hope you come to my website and learn more. Bye bye.